for streaming? Okay.
Streaming and recording.
This is John Kruger, President, Board of Trustees of the Estes Valley Library District. And we are having this evening on August the 6th, 6:35 p.m., our regular scheduled study session. Tonight's topics are around a three-set scenario for possible budget for 2020 as well as 2021 planning budget. And we will have our library director, Claudine, sharing with us. Cindy is also, Seckman is also available to answer questions, I'm sure. And so, Claudine, here's Kay now. Okay. We just started, Kay, so welcome. I'll let her get fully connected. Okay, Kay, you are muted right now. Okay, we just started our meeting. So I introduced everything, and we're going to talk about the three scenarios primarily. And we have an additional handout with regard to where we stand this year on income versus the previous 2 years. So, Claudine, we'll let you begin.
Thanks, John. Obviously, tremendous credit for everything I'm going to speak to. It goes to Cindy Seckman, who created all the attachments that you have for today's study session. I'd like to go back to what I believe was the cause for the study session, and then I'd like to share my conclusion, and then Cindy and I, and certainly the Finance Committee, can discuss any of the details. So when we knew COVID was affecting our operations, and of course, Gallagher always hanging over our heads, I believe it was Kay, certainly the Finance Committee, who recommended we start preparing for multiple scenarios, as we were not quite sure what would happen with our revenue. So Cindy has gone back and forth with me on a number of occasions, as I would forget to insert words like revenue versus expenditure. So it took us a long while for me to make sure we were talking about the same thing. But my thanks to Cindy also for making sure she did a version of this for 2020. So the bottom line is, no matter how you look at all three scenarios, you can see our assumptions, which we'll review. But the bottom line is, even next year, in our worst case scenario, which is a 15% decrease in revenue, right? You'll notice that we're assuming something that the foundation has not said that they are unable to do. They believe they'll be able to meet this year's commitment, and they believe they'll be able to make some commitment next year. We are assuming no revenue from the Friends and Foundation. And so the very worst case scenario next year is that salaries are flat, insurance costs are extremely high, that our utilities and all other static expenses remain so, that the foundation and friends give us nothing, and that we would require about $200,000 of our reserve to meet those operations. The question John has asked repeatedly is, will any of these scenarios require a cut in personnel or a significant cut in our programs and services? And I would like to use the word astonishingly, the answer appears to be no. Before we started recording, Bill and I shared our in agreement at how irritatingly accurate President Kruger can be in his forecasts, because we all thought, well, surely there'll be some dramatic change, but it appears that John and his steadfast confidence has potentially proven true. So I'll take a breath, but I wanted to say, before we go into the detail, I think the most significant item I want to emphasize before we go into each column is this is the year where we were in agreement of conducting a compensation survey for the staff. I realize if we knew the conditions, this would not have been the year we would have chosen it, but this is the year we chose to do it. I think it's still valid to do. And I always like to leave anyone I talk to about this with the reminder that the apartments above Cliffhanger are very average priced apartment units. That's a 1 bedroom, about 800 square feet, $1,300, all utilities. If housing best practices is 30% of someone's gross income, that means an average employee, in order to use this employee housing, would need to earn about $52,000 a year. And I want to say our frontline benefited full-time employees are averaging between 36 and 48. So I want to give you, like, I can make some guesses, but that's why we're going to do this with data. And that's why Cindy's my partner in crime. So when we deliver this in October, you can expect not the worst case, but the probable case and best case scenarios for next year will be impacted if you approve our compensation recommendations. So that's not reflected in these, and I felt like that was an important thing to highlight. Cindy, is there anything else to highlight that you think I may have neglected to mention?
I don't think so. The main thing you highlighted that I was thinking of is static salaries in 2021 in the worst case scenario for everybody else. And also know the merit increase
Thanks.
line item is 0. Yes, as well.
Thank you, Cindy. John, may I turn it over to the Finance Committee for anything that they would like to highlight?
Certainly, we'll open it up for any comments or questions. But first, David, do you have any comments you want to make around these?
Well, one on the income, and Cindy, I apologize for not giving you a heads up on this. I want to know your thinking on assuming that the substantial interest income on the accounts will remain the same in 2021.
Substantial interest. Can you tell me which line items?
Well, all the interest from the Colorado Trust accounts and the long-term reserve, short-term reserve, substantial income comes out that we've been planning on out of those interest income accounts. And I'm just not as confident that 2021 will bring the same returns as we've been getting.
Okay.
I just wondered what your thinking was to keep those the same.
In the budget line or
in the revenue?
In the revenue on all three cases, on all the scenarios.
From Colorado Trust.
Yeah, Colorado Trust, operating, short-term, long-term. Those are the ones with the major,
okay.
$44,000 of interest income. And you kept them the same in 2021 as in 2020.
So I must apologize. Were we going to share the document so I can look at what your, I don't have my two monitors.
We'll ask Joanne to pull up, you're talking about the 2021, David, right? So let's pull up the 2021 document, please.
Thank you, Joanne.
In 2021, you just kept the interest income from the operating account at $10,500, the short-term reserve at $10,250, the long-term reserve at $24,000, and that's the same numbers as we're predicting for 2020.
Yep.
Okay.
I'm hopeful that's the case. I'm just wondering, what your thinking was to keep those the same.
David, I apologize. I didn't give that a lot of thought. Obviously, it should increase a little bit if our balances have increased. I don't think interest rates are going to rise by any means. I think just for simplicity and I didn't go into a heavy analysis on the interest accounts.
Okay, that's fine. I'm hoping that they will maintain at that level myself without decreases.
I see what you're saying. Right.
Okay.
Well, the long-term reserve definitely shouldn't decrease. Well, none of the reserve accounts should very much decrease unless interest rates plummet further than they are, and that's kind of hard because they're very low.
Right. So with the exception of the operating account, we would not be anticipating spending any of that interest income anyway.
Right.
Funds, or should, and I think you've been working on correcting that for the last year or two. Is that right, Cindy?
Yes, absolutely.
Okay. So yeah, those that interest really goes back into the specific fund, with the operating fund being the only one that we would be spending out of. So it's the 10,500 that would potentially impact or affect revenue for our expenditures.
Yes, it would actually, especially in the worst case scenario. If our revenue does drop, then that operating account is the one where interest will fall the most.
Okay.
Cindy, would it be of value for us to contact Colo Trust for their projections?
Sure, we can
Yeah.
do that.
Yeah.
Absolutely.
That'd be a good idea.
David, thanks for, yeah, I did not pay it the attention it may deserve. So
Well,
I
and
apologize.
I should have given you a heads up before this evening to be
no, it's my job.
prepared, and I apologize for not getting that to you. The only other thing on your that last handout, the percentage of income received. I think the interest is combined in the line for taxes, property tax, penalty, and interest. And so far in 2020, it's a negative number.
Yes.
But, okay. Does that reflect the interest income?
No,
It does. We had a small amount of we had 200 some dollars, but just July 31st, the statement just came out 2 days ago. There was an $838 prior year correction that I didn't see in the other years, and it's what made that account go negative. So they took some back from 2019 for some reason.
now who took
Oh, that's
what
interesting.
back? Who
beg your
took
pardon?
what back? Was it interest or was it some of the property tax penalties?
No, it was interest. It
Really?
was interest.
Okay.
I guess I'm a little bit confused, Cindy, and looking at the totals on 2020 year to date through July, that is the interest income from those trust accounts included with specific ownership, or because
No, David, the
Yes.
interest involved there is only associated with the penalties and interest from the property tax, not the Colo Trust. Has nothing to
Okay.
do with Colo Trust.
and I understand that, John. I would think there would be some income from the Colorado Trust. I'm just not seeing where it's at.
Again, we don't reference that to our primary income because it goes into those funds. It's supposed to be transferred into the funds.
Well, it's true, but it still would hit the on income statement as income.
As revenue, that's right.
So anyway, minor questions, and again, I should have been more prepared for this myself, but just was curious on your thinking on the also.
I guess I thought the question, the spreadsheet was answering a question of how much we thought our income from the county was going to, the comparison for the 2 years, not
Yes.
all revenue, just, and maybe I misunderstood the question.
No, that was my question that I asked, and I appreciate you doing that 3-year comparison. It's really against property tax. That's our big number for revenue. And the question I have, because people were so concerned earlier on as to what was going to happen this year if people didn't pay their property taxes. It appears property taxes are being paid and we're getting our revenue. Pretty much on schedule with previous years. Specific ownership is behind, which which I'm not too surprised, although it's at 58% with half the year gone. And our forecast might be that it will be, a little bit more behind than it is now at the end of this year. The big question will be next year, will people be buying new cars or not?
Right. And boats.
So yeah, the 3-year comparison, the separate sheet, was only to address the various property tax revenue pieces. and where we stand now versus previous years, not the rest of the income items.
And David, if I may say, thank you for asking the questions you do. You know, we were only able to turn this over to you yesterday with the timely data. So this is definitely an opportunity. If there's something you are interested in as a board, you know, you can assign it to me, and Cindy and I can take it offline. So
Well,
your
and
questions
we
are
can
very
also,
welcome.
we can pick it up in the finance committee meeting on Monday too.
Okay, thank you,
Right,
David.
and I'm putting on the agenda for the August board meeting, a follow-up to tonight's discussion where we can give more specific direction to Claudine with regard to preparation of next year's budget.
John, Bill had a question a few minutes ago.
Okay. Bill, you have something?
It was answered already. Thank you.
Okay. And Kay, did you have anything that you wanted to address, bring up?
I do not.
Okay. Anyone else, any other board members have any questions or comments with regard to the 3-case scenario for either 2020 or 2021?
I've got some.
listening.
Okay, Ann, I think I heard your voice.
I'm just listening, trying to
was
get
Kay.
it all in.
Okay. I'm sorry, Claudine, that was you?
That was Kay.
No.
No?
Oh.
Bill, you have something?
Yeah, so you're entertaining questions for both 2021 and 2020?
Yes. Would you bring up 2020, please, Joanna? Thank you. Go ahead, Bill.
Oh, great. Now I'm not finding it. Oh, on the last page of 2020, I don't understand the under facilities and under specifically building maintenance. I just can't make heads or tails of the numbers. I just like you to explain it.
Okay. Claudine, can you address that? The building maintenance
Yes.
goes from 50,000 down to 13 to almost 6.
Okay, so and then capital building, and we're looking at 2020. So
Well, this is under facilities. Let's address that first, not the capital.
Okay, so building maintenance 13,000. So we had probable incidental alarm inspection. So Bill, can you repeat your question for me? Why does it go down so steeply? Is that your
What are
question?
we not doing? What are we not doing in those cases?
Okay,
Thank you, John.
Thanks. Let me pull up my. If we could come back to that, Bill, let me pull up
Okay.
all those. We have as you know, we have a facility maintenance calendar, and what I can tell you before I open up that document is we have new expenses that weren't expected, and then we have expenses that we are deferring. So I'm just going to pull up exactly what those are.
So Claudine, actually, there's a question under my question that doesn't
Yes.
require detail. So, having a routine maintenance schedule like that is so important. We're not deferring anything that's critical. That's all I want to know.
No.
Just tell me no. and I'm
Sir, the answer is no. And that's such
Okay.
a great question. And please know that even in the worst case scenario next year, Cindy and I were sure to include important maintenance even under our worst case scenario, because what we didn't want to do is set up the next 5 years where our capital or maintenance needs are in arrears. So we actually prioritized the essential ones. Cindy, do you
Thank
want
you.
to agree or disagree?
No, I absolutely agree. I think some of the things that came out of this, it was like new carpet.
Yeah,
and,
out.
those kinds of things that just are not essential, to use your word, Bill. And we definitely left in the essential ones.
Okay, my next question is on 2021. It's probably one you can't answer, but where did the 15% figure come for the worst case decline in in all those income categories?
I'd like to take responsibility and say we were operating largely off of the same assumptions for the 10-year financial planning process. And that 15% really came out of a hat.
Came out of the discussion with the trustees at our previous June meeting. I think, Bill, you brought up asking for a 15% case.
Yeah. That's
Okay.
the hat.
Well, that's a good explanation.
Okay.
Thank you, John.
Thanks,
I'm
John.
quite an older person, you know, I forget things, so.
That's all right. That's okay. No, the 2021 is what the board asked of Claudine after that June session with the 10-year plan.
Okay. So then on the next page, the workers' compensation goes up substantially. Am I reading that correctly?
Yep.
And that's
I was
just
I was just thinking all insurance costs are gonna go up next year with with everything going on, health insurance, workers' comp, general liability. I just felt that it's likely that all insurance is gonna be going up.
Is that connected to the pandemic, Cindy, or just?
That was my thought, yeah.
I didn't know that. That's very interesting to me.
Well, workers' comp, maybe not definite, just as I don't know. I just thought all insurance was going up, so that's what I did.
Claudine,
fact-
maybe you can help us now remember, when do we hear from our insurance on the coming year?
So thanks, John. As a reminder, we are glad to be part of the town's benefits services. So we're part of that pool. They do the negotiating for us. And one of the reasons why Cindy added the 10% is that the highest I've observed since I've been here that they've negotiated, it's the highest, is 10% increase over 1 year. So we thought it was a fair assumption to put it in as a worst case. And John, we tend to find out pretty late, like I'm going to say October, November. And then we tend to get it in on time. I will say the town has been very successful the last 4 or more years of not having significant increases. So we'll see.
Yeah. That's one that we just have to wait on, like you say. Okay.
Okay, I only have 2 more questions. So on the last page of 2021, there's $20,000 for Tuck Point Stone.
That may not be essential. It's just, I think the Tuck Point Stone is done every 25 years. It could wait a year. It's just an exterior maintenance on the stonework on the outside of the building, Bill.
Gotcha.
Well, that's not really capital. That's still back up in facilities maintenance, isn't it?
It's over $5,000.
Okay.
John,
Okay,
it depends which auditor we have who tells
Yeah.
us how to account for expenses, and I'm accounting per the auditor.
Okay.
Okay, Bill?
My last question is just, if we end up with a budget that would allow us to go $250,000 into our reserves, then don't we need to know more about what could happen in 2022 and 2023?
Do you have a
now I'm
crystal ball?
I'm sorry, John, I didn't hear what you said. What?
Well, you want to know what's going to happen beyond 2021. We don't even know what's going to happen in 2021. So
Well, I
2022, I guess I think we would need a crystal ball of some kind, because no one's going to tell us what's going to happen.
I think it would be like a weather forecast. 1 day is good, 2 days is okay. Past that, you can't count on it.
Okay.
Right now, what I'm working against is the information I'm getting on real estate for Estes Valley. Houses are selling within 2 weeks of being posted, and they're getting as much as they're asking for or more. Same with condos. no value, house values have been decreased. And I have no anticipation until we get something more specific from the county assessor that there will be any decreases over the next few years in property values. And that's the big item. The other piece, of course, is the separation, the difference in the residential assessment rate and that going down versus the constant level for non-residential. Whether or not, I haven't heard any updates on any of our businesses trying to get out of paying their taxes or getting their assessed values reduced. The other thing that I think we need to remember on the business side, especially in Estes Park, although it's for the whole state in general, our businesses don't own their property. They rent, lease. The owners of the property are still going to have to pay their taxes, even if the business goes out, which there are a few downtown that have. We have some empty shops. But the property owners are still the ones responsible for paying the taxes. Now, the county allowed for some of the penalties and delays in payments to go by for a few months, but that's now changed and they're collecting those penalties again. So that's the best guidance I can give you, Bill, for 2021, 2022 is property values are not going down. The big element question, I think, as far as our revenues from property will be determined by the residential assessment rate and what our legislature does. If they allow it to drop significantly, then that's what's going to hit us, not the non-payment of property taxes.
Thanks, Sean. That's very reassuring.
Well, that's just my opinion. So, anyone else have any questions or comments about either of these scenarios?
John, can you hear me?
Yes.
Okay. I would just add that at the worst case scenario for 2021, assuming a zero contribution from Friends and Foundation, which I'm confident that won't be the case, is not too bad of a worst case scenario for us. I will also then play the cynic. I think you gave a good analysis of where we are now. I'm just worried about what happens in the next 3 months. I think the full economic impact has not fully taken effect yet. So I really, to even speculate past 2021 is just, to me, pure speculation. So.
Yeah, well, I kind of agree with that. That's what we did with the 10-year plan, and that's what we try to do is guess on out there, and we have that in a couple of scenarios that you did for us in June.
But that was all pre-virus. That was all pre-virus. So.
Well, no, you did a 10-year plan considering what's been happening with the that possible downturn for the next 2 years.
Right. We did a little bit of analysis, but I just really, from my thinking, I'm waiting for the next few months to really see what the full impact is going to be.
Fair enough. You know, again, we don't count on sales. So so far we have no indication at all that I have seen or heard that property values are going to go down in the Estes Valley. So the rest of the economic issues, how much can that possibly affect our revenues? It really comes down to what the state will do with regard to either deferring or reducing the rates on the non-residential.
Exactly.
And quite frankly, I can't give you even an idea of what the split is for us between non-residential tax revenue and the residential. I think the form we get from the county describes it that way for us, but I don't have that in front of me. Excuse me. Okay, I have something, if no one else has right at the moment, I have a couple of things. First off, Annie Finley, the scenario for 2021, I understand that your board may not have an idea what they can commit to yet, although we were supposed to have gotten that according to the MOU in June. So I will say this for the record and maybe repeat it at the board meeting. We have a pass-through of over $80,000 for salary and benefits for your executive director. We will not pay that if you are not going to reimburse us that $80,000.
Okay.
I would assume that y'all would want to keep your executive director and pay that at least. The rest of it, the other 120,000 approximately, is your donations to the library.
So, John, I wonder if it didn't get communicated from those of us who attend foundation meetings to this body, but the commitment did come out from the last foundation
Board
meeting,
meeting.
Annie.
Yeah.
Maybe you could speak to that.
Okay, we haven't had a board meeting since then.
Yeah, so I could grab the minutes. We did make a commitment to give you the 200,000, and the board voted unanimously that that was what we were going to do. So
You're saying for 2021?
no, for 2020.
Oh, okay. You made that commitment last year. Okay.
So, John, I believe, and we can pull up the MOU, I believe the MOU states that in June, we determine whether the target can or cannot be hit for that year. It's a check-in. June is a check-in of the existing year.
But it's not a check.
No,
Sorry,
it's not a check, but
it's a check-in.
okay, I will reread it. I read it that they were telling us what next year they were going to be contributing so we can prepare our budget.
Well, John, we know what happens when I think I know something and you know something. So let's
I will
give me a chance to go look at the MOU.
I can get it up right now.
I'll reread it.
Be kind, everybody.
And yeah, I'm not trying to be nasty about it.
I know.
We will be giving direction to Claudine at this month's board meeting as to what kind of budget. And that's the other thing I want to bring up now is my anticipation is we will ask her to prepare one budget, not two, not three. And so everyone needs to be looking at these scenarios for 2021 and be prepared to have the discussion and make a commitment to Claudine as to which version, if you will, we want a firm budget preparation started. So please review that closely.
So, John, may I step in for 2 bits?
Yes.
Number one, thank you for that direction from the board. Just a reminder that you can give me direction. It's due October 15th, which awkwardly is the same date that the counties are now directed to provide the first probable revenue projection for 2021. So we have a few things going on at the same time. We might want to sort through that today. And I also want to gloat for a moment because I'm looking at the MOU and it's a rare moment that I get to be right.
Okay.
So in June, it says the library informs the Friends and Foundation of unanticipated developments and funding requirements. And in return, the Friends and Foundation report funds and restricted gifts to date to the library. That's on the calendar.
to
In
date?
October, we request from them transfer of approved funds. And the difference for this year, John, is that they say, and Annie, please correct me if I'm wrong, the Friends and Foundation can deliver on their commitment in January
Correct.
for 2020.
Correct.
So that's the significant change.
Correct.
Okay,
And
you're
that
saying
was
the entire 200,000?
correct.
Not until January.
Correct.
And you expect us to carry Sarah's salary and benefits for you?
I can't answer that.
I don't think the MOU provides for that consideration, does it?
You know, I can share my screen, or I can just forward this to.
We can postpone further discussion on that to the board meeting. Annie,
Okay.
I guess I would appreciate some clarity from you or
Okay.
your board. If this has to do with who has your money and they don't want to write a check, I have a significant objections to not receiving the funds before the end of the year so that they can be recorded for 2020.
So,
Okay.
Because if they don't come in till January, David, help me out. What's our accounting system? What does it allow us to do? Can we put it back to December for the 13th month?
Well, I'll almost defer to Cindy. In the modified accrual system, Cindy, will that be accrued for December 31st?
Yes, the library on the modified accrual system, we can record that in 2020. The problem that the auditors had this past year is that the Friends of Foundation is cash basis. And since they are a discrete unit.
component unit.
Component unit, thank you, Claudine, of us, and we're in basically the same overall financial report, those had to be in the same period. So the Friends of Foundation couldn't record it in last year's in 2020 and us in 19. So that was where the problem lies. And that is the question I'm going to put out to the auditor. You know, what do we do about that this year?
That would be good to be answered. The Friends and Foundation are completely cash basis?
I believe so.
Yeah.
Even on the audit report? Yeah, interesting. Okay. That would be the conflict, John, because on our system we could do it, but exactly what Cindy just said. So yeah, that would be good to clarify.
So I would just like to, on a relational level, point out that Sarah and I and Cindy and Annie have been in discussion to figure out January may not work for that. So is it necessary for it to be December? Because what we understand is it has to show on both our books the same year. So that's the bottom line. And so the foundation that's on, they're reviewing it, and Cindy's talking to the auditor. So we're going to make sure we do it right. In review, the MOU states that we get an annual, I think this is the correct MOU, deliver annual check to library, including reimbursement of full year of compensation for executive director in November. So what we're saying is it 1 or 2 months later, noting your objection, John. So just want to point out some of these things are still in discussion offline.
I would appreciate hearing why their board wants to put it off till January. Is there a good reason? Just to say they're not going to pay it, that's not a good reason.
I think basically what we wanted to find out was what was going to happen by the time we got to October, and then we'd have a better sense of where we were in the bigger picture. And so we just wanted to give ourselves a little room because of the COVID. It's a little difficult. So we can probably have something to you. I mean, I'll talk to Sarah, and as Claudine said, we're working on trying to figure out the path we want to take. So,
Okay, well, we have an MOU that I hope that we can all stand behind. We can discuss it, as I said, further at the August board meeting, please.
mhm,
Okay, thank you.
mhm. Thank you.
Um,
Can I just add something, John?
yes,
No, I was at that meeting, and I think a little color might help here. The board discussed at length what their income was going to be, might be, and the uncertainties around COVID and the store and contributions, et cetera. And it was like a moral stance, I would say, they took, that they were going to, no matter what, they were going to contribute the full 200,000, even if that meant dipping into some reserves and so on. I think it's important to note that. That's all.
Thank
It
you,
would have
Bill.
been very easy to go the other way.
thank you.
Thanks,
Appreciate
Bill.
that. Yep. Again, I'm not trying to be overly difficult, but we need to do things according to the agreements we have. And a big part of that agreement with the Friends and Foundation is that we carry the salary and benefits for your executive director. And with our limitations, I don't think we can actually pay that ourselves without being reimbursed.
Mhm.
The board wants to make a different decision, we can have that brought up at a board meeting. Okay, anyone have anything else on the various scenarios? Any questions so that you're prepared at the board meeting to give some direction as to the preparation for next year? Okay, yeah, Claudine.
So again, in review, the history of Department of Local Affairs budget calendar, we are statutorily obligated to, I am anyway, obligated by law to submit an official draft to you on October 15th. So you can direct me to, with Cindy's heavy lifting, to submit something on that deadline, knowing that what we're going to get from the county will be an accurate assessment of what we're going to be operating off of. I wonder, John, if it would be most efficient for, I want to make a proposal to the board that Cindy and I operate on the probable scenario. We submit the probable to you, knowing we're going to get corrected within a number of days from the county, but that correction will be accurate. So we'll meet the law, the spirit of the law. We'll work under the probable scenario. I feel like that's why we did this work now, is so that we don't have to make it up later. So that's my proposal. Cindy, you can disagree before I turn that over to John. But I think that might be the best use of our time and yours.
Well, are you saying you want us to get started before the board meeting?
Maybe I misunderstood your direction, John.
My direction is that the board should give you direction on what kind of version of a budget to prepare at our August board meeting, not tonight.
It is a study session after all.
Yeah.
And my counter to that was, maybe that's an action that Cindy and I are going to do anyway, because we will just follow the probable. But if you'd like to wait for the August meeting, we're happy to wait for that discussion and decision.
I would prefer you wait. You will have I would prefer you wait. You'll have a finance committee. The finance committee can give you some guidance at that meeting and bring their recommendations to the board. And we'll have a full discussion of which version and whether it's probable or best case or worst case or something in between.
Very good.
As of right now, the other thing I have that I'm concerned about on the 2021 is I would not personally support any non-salary increase budget. Now, how much that salary increase will be, we can have the discussion, but I will not personally support the board recommending a no salary increase at all, especially given that we're getting ready to do a salary survey, which I believe will show that we're well behind on salaries already. And to turn around and make that even worse next year, I think would be irresponsible, quite frankly.
Got it. Thanks, John.
John, I agree with you. I think we should pick this up Monday in the Finance Committee and come with recommendations for the August meeting.
Thank you. I think we've lost Kay, although I'm not sure. There's a telephone.
No, I'm still here.
Oh, okay. You want to make any comments around any of this?
I have a question to Claudine and Cindy. Is if we wait to give you direction until the August board meeting, will that give you adequate time to do the budget?
Yes. Thank you, Kay. I think it will.
Okay.
Beth, we haven't heard from you. Do you have any comments or questions about any of this?
Nope. Thanks for asking.
Okay. Everybody to be as clear as possible of what we're looking at, and that's the purpose of this evening, so that we can have the real difficult discussion and direction in a week and a half.
Thank you, Claudine and Cindy. I just said thank you, Claudine and Cindy. I think this is a very good start to these projections.
Yes. More numbers than I had hoped that you might have to prepare, but if it helps you as you move forward, then that's great. Overall, I think I would say good news as far as the potentials, regardless of the revenue cases that we're looking at, especially given our long-term reserve situation. Okay. Anyone have anything else before we bring the study session to a close? Claudine, any other items?
There are a lot of operational, you might have all seen, I forwarded just a little bit before this meeting that the variance for Larimer County is remaining the same, which means that library operations are largely remaining the same. And I will have a more full report for the regular August meeting, but I just wanted to let you all know two things. Even with the reduction in staff due to some key staff members on medical long-term leave, staff is at full tilt. And I don't know, Beth, I think you said earlier, how can things take up so much time when you don't even have the students, the purpose, right? And that's how we feel, is we have half the building open, but I think we can all agree everything we do takes 3 times as much time to get done. With that said, we're cautious as we plan for our next and probable final phase of opening for the foreseeable future. And we're shooting for an early September 10 a.m. to 6 p.m. So that people who don't have the flexibility to show up in the morning can be there. But I just want to let you know that, give you an operational glimpse. I like to do that from time to time so that you know what we're thinking. But all of our conditions are the same in the building and our digital services, but we're hoping really to double the number of facility hours, because what we're hearing pretty consistently is there's some stability in just having a nice mortar and brick public library to go to.
So are there any current plans to increase the hours?
Yes, that is, I'm sorry, I used too many numbers earlier, John, and maybe that was too many words. Yes, we are planning right now for early September to almost double the number of hours we're operating right now.
Okay. So longer days, basically.
Longer days.
Okay. Very good.
Would that be with the elimination of curb pickup?
Thanks for asking, Kay. No, it would be in addition to curbside pickup, and we'll be able to Right now we have them on 10-minute increments, and we realize people were waiting unnecessarily, and that we can do them in 5-minute increments. So we'll be able to do curbside more, and we'll be able to do open hours more. And
Great.
I would point out that the variance actually has language just for libraries that specifies curbside as essential.
Right.
We couldn't do it without curbside per the law. How's that?
That's right.
Yeah. Thanks, Kay.
And the variance runs through what date?
I know the answer to this. September 9th, September 8th. Cindy,
Okay.
can I get a witness?
Four additional weeks, as long as cases don't increase within the county.
Thanks, John.
Okay.
Okay. I appreciate everyone's participation and attendance, and we will have our regular board meeting then on Monday. I had it up here a minute ago. August 17th, 6:30 p.m. via Zoom. Everyone, please plan to be logged on a little bit before that, if at all possible. We will start recording then at 6:30. I express my appreciations also to Claudine and Cindy for the preparation of the materials, and Joanna Stensland for hosting and operating our different documents and the Zoom meeting. With that, I'll ask Joanna